Hello, everyone. We have a fresh new start of a brand new live stream. How is everyone doing? I'm going to be your host today. If you have been into our sessions before, you know my name is Victor. Today we have an exciting session for you guys. We have a lot of volatility in the market. Things are boiling up. These are opportunity and great times to be as a trader. So we have a great show for you today. I have in the waiting room, we already have a special guest that will be joining us for today's show. I'm sure you know who he is. He is a great trader and he will be sharing his great insights on the market today. Let's uh, let's welcome Rich. How are you
Hey,
doing, Rich?
I'm good, thanks. I'm good. Not every day I get an intro like that, and on today as well. I see in chat Red Sea. That's an understatement. What we're seeing today in these markets. This is one of those real pivotal days where there wasn't much of a clue as to what we were going to see today, and I woke up and just saw these equities are just down massively. I'm sure if you're a trader, you know exactly what we're talking about. But Victor, thanks for having us on. It's a real treat.
Yes, yes, yes. We have a lot to talk about today, Rich. The elephant in the room. I mean, if you guys haven't opened any news website yet, you haven't been looking at the market, maybe you've missed it. But I mean, as soon as you open any any chart, you will see that the equities are dropping massively. That sounds like a bad news, and of course for the buy and hold investor, that is not a great place to be in, but it's part of the market. I mean, markets go up and they do as well, they go down as well. So it is but it is exciting. We started today with headlines saying the Nikkei, it was at some point 12.4% down, which is a lot. That is a lot. I mean, I looked it up. The biggest drop on the Nikkei historically was on the 20th of October in 1987, right? Black Monday, where it dropped 14.9. And so 12.4 at some point it was at that level. I mean, that is the second biggest drop in a single day. So this is massive. It's
Mhm.
not an understatement when we say that. So Rich, we how do you look at the market when when this kind of move happens? I mean, what do you think? What's the first thing that comes to your mind?
So fundamentals. Today, fundamentals are driving markets massively. I'm a technical trader. I love to mark out supply and demand areas, support and resistance. I love to use all these sort of little concepts that we talk about on stream. And I just trade price action. And today, price action to me does not make sense. So my job is to manage risk really, really well and to sit on my hands for the most part. All the kind of things I normally trade. Look for these lovely little sort of head and shoulders patterns, these order blocks. We'll touch on them a little bit later. They are like a probabilities game. And we get these nice kind of reoccurring themes. Maybe 6 out of 10 will be winners. But today, I wouldn't even try and trade them. I think the market is just picking a direction it's going. It doesn't need to say fill that fuel tank, as we talk about sometimes. Liquidity runs are really good ways of big institutions filling orders. Markets can then drive in opposite directions. Today, I think the market filled this fuel tank over months and months and months of interest rates being where they are. And we're seeing these fundamental drives. So I love to fade markets. I like to look for overextended markets and saying, where are you running to? And trying to find these little price points where the market can bounce. Today, I don't think I do. I don't think I do too well. If I was to pick price points and say, hey, I think the market bounces here. Market is less reactive of what happened from supply and demand points from say, not yesterday, last week, the week before. And today it's moving to new price points. It's trying to price in what I believe to be this potential base cut we're going to get on the USD forecast for September. Doesn't mean to say it's going to do it, but it's acting like it's going to be dropping it in. But if we pull out some charts, you'll see how much this has moved. I mean, we've got what, 10% down on the Nikkei. We've got DAX 3.5% down. Was it the
And
forget the index was down. The US stock market was down what, 5% today already.
yeah, yes.
Gold hasn't moved. Crypto, I think Bitcoin was down nearly 14% earlier on today. So we're seeing opportunity. We're seeing a lot of opportunity today. So manage risk. Wear a stop loss, as we say.
Yeah, yeah. You're making great points there. I think uh, the markets. We have to see all of this when you said fundamentals, and that's what we mention a lot of the times, right? Technicals, they let us read the market. That's the expression, or that's the quantification of, and the graphical representation of what the market is trying to do. But really, the driver of the market is fundamentals, right? It's the economy, right? It's not a trend line on the graph that will, make price go up and down. So, and today is a great example of that, right? Those things, those points you made. And it is, all of this started with the, jobs report being surprised everyone on Friday, right? The NFP, and those, interest rate expectation shifting, and whether or not the Fed will act before, whether they will be maybe a rate cut, a surprise rate cut before that September session. All those rumors, they get very contagious in the market. So that is a that's the theme, that's the elephant in the room, right? That's what everyone is talking about. And if we look at you mentioned the U.S. equities, so far it's the losses are, I would say, are 4% on Nasdaq, almost around 5. They are, they're still moderate in terms of crashes, but the day is still young, and who knows what will happen. Bitcoin, according to the Bitcoin is today is down 17.8%. I mean, that
17, so
is
it never recovered. Can we pull this on a screen to have a look at a visual to see kind of how this looks on a daily
sure,
chart?
sure. Let's put at Bitcoin. We have a massive drop
Wow.
on Bitcoin on today. I mean, this candle, if you look at previous candles, it already tells you what kind of day we are dealing with, right? It's already the biggest candle you can see on this chart, from even if you go much, much further away. So it's very, very significant. And this is, of course, crypto being a high volatility, high risk asset. You're going to see this kind of movement in the market when everything else moves a lot as well, right? Either that be up or down. This is normal. I mean, for crypto, when it moves a lot in either direction. So it shouldn't surprise anyone. And we will start to analyze later in this stream to see, where are the values areas, or where can we be looking to be buying either Bitcoin or the equities market. I mean, I think that is, from a technical standpoint, my first instinct is, let's not get into the rush of the market. Let
Mhm.
things settle down, right? Let the exaggeration, let everyone else, drive on that exaggeration. And then when the dust settles down and the picture becomes clear, then I feel like, okay, this is my moment. It has made its move. I'm not trying to chase it down. I'm not trying to, buy it right away. I want to be, composed, not lose my composure over these kind of movement. Because, I mean, what does this how does this make someone who is holding BTC, Bitcoin in this case, when you see in one day the market dropping, a fifth of its value? That's got to be do something with you. I mean, as an investor, as a trader, that's gonna affect you. These are the moments where, your mindset and your psychology as a trader are being tested. So you got to be extra careful not to let those emotions drive you into, things you shouldn't be doing, right? So calm down, right? Look things from a rational standpoint. And if you can't find value, if you can't find, you don't know what to do, then maybe the best thing is to not trade at all, right? Just to look things from the sidelines until it is clear what needs to be done according to your trade plan, right? So I think that is how do you, when you see this kind of a movement, Rich, what do you think? Are you with your finger on the trigger, or are you doing what do you think? What goes through your mind when you see these kind of moves, big exaggerated moves?
If you pull up my chart, I'll show you how I was looking at this morning, and I'll give you an idea of what my thoughts were. So this is how I mark up my charts every day. Simple supply and demand, naked charts. Not interested in using indicators. They're lagging. I can see everything I need to within current price. So this was just typical price action. I've got a line on the high here, which I mark up in the Asia session. I've got a line on the low. Now this blue box is effectively when I'm sleeping. So when I come to the market, it's right at the end of this blue box, and this is everything that I see. Now this looks like a pretty normal day in price action. Market has accelerated up, it's oscillating along, potentially trying to go lower, can't break and close under this low, and it's just sitting in this range. Now, in a normal day, I would look at this and say, hey, we're starting to push lower. I think there's an opportunity the market could pull back, and I could be looking for shorts. And then I open the side panel up here, and I just started seeing these sea of reds. And I was like, whoa, hold on. Before I do anything, there's something not right here. Something is significantly driving markets. So I went on Forex Factory. I had a look at the news tab, and I was reading all these comments about like these interest rate base cuts being forecasted in, and a little bit of unrest as well. And I thought, this isn't a normal moving market day. And one of the pairs I love to trade is Germany 40. And I was watching this, and by the time I come to the market, this had already gapped down 0.5%, and it had dropped another 3%. Now, my trading edge is built on fading moves, trying to find overextended moves in the market, looking to fade them back to some kind of normal. Always use a stop loss, always manage my risk. And if I take a loss, no problem. It's just one good loss. But when I saw this market had already driven and gapped down 3% this morning, and this was the open, it's 2.8, and it drove down to 3.5%. I thought, I don't want to be a buyer. I don't want to be buying this. Momentum is clearly to the downside. Something's driving these markets. We could be entering into a risk off. I want to position myself obviously to make profit, but before I make profit, I'm looking to retain the capital I've got in my account. So today was a no trading day for me. Unfortunately, it did keep me out of the market. That discretion kept me out of the market when I was looking at Euro USD. And rather than trying to sell in this, I watched this break higher, and I thought, this looks like a typical break and retest. Market drives higher, comes back, tests this high from the past once, pushes higher again, takes liquidity to the high side, comes down, takes liquidity from this low, and prints this beautiful little bullish candle. I'm like, well, if I'm a breakout trader, my technicals tell me if this short fails, which it did, look for the break test. So I sat on my hands and I said, look, I didn't take this trade here. I didn't take the short, and I'm not going to take the long. I'm just going to sit and I'm going to watch. But this would have been the trade that I was looking for this morning. And then much the same on GBP USD. So I only trade Euro USD and GBP USD. And then the DAX is a bit of a different strategy. We see this overextended move happen on Friday. Market oscillates sideways. And when I joined the market, it was about here after this huge extension to the downside. Market comes up, takes liquidity from the high, prints a bearish candle, opportunity to sell lower. And I thought, I don't trust it. So this morning would have been a small profitable day, but I would rather only trade market conditions, which I'm comfortable with, because this stuff here, I'm not comfortable with this. It doesn't make sense to me. So first and foremost, I'm a risk manager, and I love to manage risk and look at those trades that can, I guess, give me a risk adjusted return. And today I didn't see it. Not with all these kind of these volatilities. Actually, side note, I was looking for a 20-point move in the DAX this morning. I was looking down at the 5-minute chart, and I was watching this, and I was just looking for any kind of sign of buyers coming into the market. And I looked at this 5-minute candle print, and I said, okay, let's say I was interested in this 5-minute engulfing candle, which took out this low. Market's overextended, maybe it pulls back. I measured this candle, this 5-minute candle here, and it was nearly 100 points. I was like, I'm not touching this. No way. So that's kind of my sort of insights from today's price action. Doesn't make sense to me. But what about yourself? Have you been trading normally, or have you just been watching?
I have been just watching because I
Mhm.
well, the thing is I didn't get a signal. So the first thing, I try to just follow the signals, even when, regardless of how I feel, how regardless of my opinion, it's not my job to, trade on my opinion or on my emotions or my expectation. My job as a trader, since I rely heavily on a mechanical system with very little discretion, my job is just to execute the signals. And I did not get a signal today, so I'm on the sideline so far, and I know that I'm probably not going to get a signal anytime soon. So that is okay with me. I did have price. I will show everyone, the audience, what I'm talking about. This is EU, and as you guys know, I trade EU mostly. We did have before, right? And when the market opened, we did have some order blocks that were revisited, and that is typically where I would be looking for my entries, but I didn't signal me. So, and I know there's no on the H4. There's nothing formed yet, right? And it has already left the demand area, the H4, which would be the basis of my setup. So because of that, I don't have anything to trade. I don't have any signals, and that's okay. And that's the benefit of having a strict trade plan, and really distinguish or identifying and knowing when is your moment to trade. And my moment is when a set of rules are being satisfied at the same time. And if that doesn't happen, I can just relax. And even if it happens, and I think like today would be an exciting day to trade a signal, um the fact that I have a specific place and way to enter the market, and it doesn't matter what the results is, I know that I will let the statistic, take away and give the results whatever it is going to be. And I don't feel that responsibility on my shoulders. It has to be a winner or a loser. I just do the trade plan, execute it, and the strategy, which is based on data, of course, will do
Mhm.
its thing, right? It will do what it has been doing all the time in the past and in my data. So I'll just relax and let that, edge play out in my favor. And it may not be a winner today, but that is just fine. Do you realize how that, for those viewers who may think, discretionary is the way to go, I would argue. I know it's not about who is right or not, but in my case, I would argue, having a good structured way to approach the market and frame your trade ideas is so comforting, right? Because I don't feel any FOMO right now. The market is going, can be doing all kinds of things. Don't have the signal, I don't do anything. As simple as that, right? So it puts me in a very comfortable position psychologically. I'm at ease. I'm just waiting for those signals. I'm watchful, and just waiting. I'm excited, of course. There was a viewer, uh, we who asked about, let's see, about Jonathan, right? Because Jonathan has is a big proponent of BTC, and today Jonathan is not available, so he is doing some important activities, right? Meeting up with big equity hedge funds. But he is, yeah. So I'm happy to be doing this with Rich, and I think it's. But talking about the BTC, Jonathan, he, of course, most people who went into the chat can see that how Jonathan is looking at this from a perspective, a long-term perspective, right? So where today's drop is basically you can, it gives you opportunity as well. It's not only about, those who lost, or the losses that are being shown on your portfolio, right, on your investment account, or your whatever position you are in. If you have a bigger, a long-term perspective of in trading, and especially in investing, this can be, um, opportunities to be buying, right? Because you're buying the same asset, right? The case for BTC, for Bitcoin, for example, did not change from 1 week ago, right? It's only the market conditions has changed, and the expectation of people, and the risk appetite. That is, I think, the key word here. People are going risk off, right? Because that's the volatility, and the drop is that's the expression of that fear in the market. And this is the moment, as investor, but also as trader, then you need to be able to find, those opportunity when everyone else is fearful. You need to get, uh you know get ready to put on some positions, not necessarily today and right away, but I mean, in order for you to catch and capitalize on markets movement, you should see these as opportunities and not be fearful, right? You gotta
Mhm.
be you gotta be ready to put on some positions. What are your thoughts on that, Rich?
We were talking this morning about where has this money gone? So much money has come out of these markets. We were going through the various asset classes and saying, look, what is it that's if something's down 8-9%, what's up 8-9%? There was nothing that I could find that was the money has moved into, and it looked like a lot of the money had been pulled out to sit into cash. So if you're an investor and you've pulled out this money and you're sitting on cash, it's a great opportunity to be able to start to slowly build positions into some of these things. When we think about oil's another one, crypto, another one. When we think about even just dollars, um, stock markets, there's so many things. Silver, I mean, what's silver down 7% today, I believe? Let's have a quick look.
It's
Silver is
almost seven.
down.
Yes, 6.9. Yes, 7.
And like you were saying earlier, like, has the use case for these changed? No. Are they still needed in the world? Are they still going to be used? Are they still going to be seen as valuable? So if you're an investor, my sort of thought would be, well, hey, I'm going to start building portfolios into these. But like when we have a trade, we go in with our full size, we have a stop loss, and if we're out, we're out. When we're typically investing, we don't use as much leverage. So our cutoff point with Bitcoin might be, it genuinely might be zero. They're saying, okay, well, I've got £1,000 to invest. How would I do this? Well, today I might put in 200. If it goes up, no problem. Maybe I get to double my money over time. If it drops, I've got another 200 to put in, and another and another. There's nothing wrong, or sorry, there's nothing worse than a scalp position that turns into a position trade where you're over leveraged, holding on to something, and you've gone in full size. But I think some of these assets would be really, really good to build long term positions on. Nikkei being down 9.6% long term, will it ever be above what it is today? If it is, you make money. So, kind of looking at these things and saying, what would it look like if I was to stage into this? How would I manage my risk? Um, my job as a trader is to, well, I think my day trading strategy turns around capital quicker, but the goal is to be building a part of like an income source, something that's much, much less active. But I don't have to sit and trade every single day if I don't choose to. So yeah, I'd be looking to build longer term positions in equities, commodities, um, even cryptos as well. And I didn't think I'd say it, but I'd be looking to build in cryptos, but not. I'd want to see something from a technical standpoint that would get me in for my first entry. And right now, I don't see that. Not with Bitcoin dropping as aggressively as it has. Um, yeah, I wouldn't be interested in buying this just yet. But what about yourself? How would you approach this in terms of like a long term stance?
Well, being a trader, I let the technicals guide me, and
Hmm.
basically, as an investor, what you're doing is just going a time frame higher. It's we've been talking about this all the time, right? How the fractal nature of the market is, from the daily to the hourlies and to the minutes, and it's the same thing going to higher time frames as well. So as an investor, what I like to do is look for those demand areas when they get retested, and I see some consolidation and the market starts. For example, we can be looking at I know I'm not on I'm not a BTC diehard hodler, but to me it's an asset just like any other. The only thing is, it's very volatile and it's very popular nowadays, but in essence it's just like any other assets, right? As a trader, so and as an investor as well, so I see a lot of opportunity. If we look at the long term, the how parabolic has been moving from before, and this chart doesn't go even that far. You can see the potential already. So as an investor, I think Bitcoin makes a very good case to have at least some exposure in your portfolio as an investor, right? But without going into details how you should build your portfolio, which depends on your risk appetite, your age, and things like that. um, what I would do is I would over time dollar cost average into it, right? Because that's, as an investor, is the safest way to get into to build any position, right? You don't leave or let just one timing or one transaction be the whole. Everything depends on that, right? That's going to be your entry price. So what I do is I try to distribute that entry, right? Entry risk, if you want to call it that, that timing risk of your entry distributed in time, right? And you will not get all the time the best entries, of course, because you will be getting in and out at different level. But I think that is the best way to do it, especially if you uh, if you lack the discipline to be waiting for better prices, right? Because a lot of the times, there are prices. For example, let's look at Bitcoin right now at the chart. On the very high time frames, we do have this structure has been already taken out, and this as well. But if you look at it, we are in a quite nice range where we have surpassed and made, you could see, equal highs. But and and we have this range. I will mark it down. If you consider this huge range, right? Of course, the all those who are looking at the fundamentals and the expectation of Bitcoin will be arguing, this could go much higher. Yes, and I think so too. But right now, this is the range we are in, right? And a lot of the Bitcoins traders will say, well, it's not very likely to go that this far, and I agree, right? Because of the all the changes that have come into play and changed the market. ETFs coming, being available, and mass adoption of Bitcoin as an investment tool. But when I go back to the charts, these are the structures that I will be looking. I will be looking for this range, and as you can see, we are in the upper half of that range. So to me, I would like it to come a little bit below that 50% retracement, which I always do, right? On my entries. I use that as a gauge, as a
Hmm.
objective gauge. Where do I want to be entering? I want to be entering, very simple. Nothing too fancy about this. 50% retracement of its last leg. And this is the last leg it has had on these higher time frames, right? As an investor, you have to look at from a bigger time frame. So I want to be, this is 44, and I would say my approach is I want to be buying as it is getting into that area. That's when I want to be starting cost averaging into a Bitcoin position. I have a very little position right now, and that's what I'm going to be doing. So today, to me, I know it is not very popular for everyone who's holding BTC, but today is a good news. And because it goes down, that means that I get opportunity to buy. That's opportunity getting it at a discounted price and holding it for longer, right? Because of the higher time frames, what I just the long-term trend that I just discussed, right? The market outlook. And that's what I would do with the equities as well. If we look at let's say the S&P 500, we have been a just look at the year to date. What have we done right this year? If we look at what is the difference from the start of the year, right? We are here. If we put a vertical line there, what's the start of the year, which is about here, and I think I have it. There you go. Maybe like so. What has the S&P done from the start the of the year? What's the highest point it reached? 20%. That is that's 2.5 times, or around more than 2%, 2.5 times its average return historically, right? So you already knew that we were kind of getting overextended on on its move, right? And so to me, what I would want I want it to come back to some demand area to start building it, not buying it as it is breaking all-time high. And if I'm going to be buying, do it at a very slow way, using very little, not really build that position until it starts getting into this discount area. And that's what we're having right now. We are getting into some monthly demand area. We'll have to see if that holds or not. It's far too early to say anything yet, and we'll have to. S&P is right now at -4%. We'll have to see how that develops through the day, but it looks like it has some more downside to it. If you look, this is there is a quasi in here, right? And I can see price going lower and retesting these structures before it has anything starts to show some support. So I'll think that actually let me see, this would be the area that I'll be looking to see how it behaves when it gets there, and that will decide if is this a short downside movement, or is this something much more prolonged coming on? Because if it breaks this level easily in either today or in this week, in the coming days, then it's probably going to go much lower, which is a healthy correction. Although it's very frightening to get to go this low this fast, but it's gotta be aware, right, with historical data, what the typical drawdown is on your asset. And if that's with the S&P, the drawdown can be quite high. So it's knowing your data, knowing your historical data to frame the situation, put it into perspective the right way, right? Putting into historical perspective, and that should guide you into what to do next. That's what I would be doing in terms of investing. But I think today is going to be difficult for everyone who is on a buy and hold. We as traders, the equity going down this much as a trader doesn't affect me, right? As an investor, it does. But as a trader, I'm ambivalent about this, because as a trader, I want this to go lower, because I want to catch, maybe a move as it comes into a demand area. And as an investor as well, but I do see, my portfolio going down. So it's something you have to put that into put it in balance with the opportunity it gives you. And in the long run, if you're able to, if you know your limitation on your risk appetite and how much drawdown you can withstand, you will be able to navigate these moments uh, uh, profitably. And by saying profitably, I mean, capture these opportunities as they present, not necessarily today, but this may be the beginning of a prolonged move going down, and be able to start thinking, okay, now that everyone is fearful, now it's time to get greedy, but not yet, right? You have to see, you have to let the technicals talk, guide you. The other thing I would want to say is, right, market has gone about 20% up from the beginning of the year, right? Still, market is up 9.6, which is above average. So if you put that into perspective, it's not like, everything is coming down, and we're all losing. If you started at the beginning of the year, you're still up 9.6, right? So don't lose sight of that. I will be saying. All right, so let's look at some market analysis. Let's do some market analysis in. Or let's look at the chat. Let's see
One sec, Victor.
what
Just before
the.
we pivot into that, can you pull my screen up? I want to show you a quick technique that I've used in the past. This is something if you are looking at investing and you're like, I'm not sure how to pick zones from the past. What would it look like if you were to apply a very, very, very tight risk management rule, and you looked at some of these assets which are overextended, and you just waited for a bullish candle close? What would that look like on a daily chart, for example? So, if we were to look at silver or some of these markets that are selling off aggressively, um, this one, if you were waiting to buy the nickel, you would have bought this here, there. This you would have had one order in this. Now, if you were waiting patiently for another bullish candle close, you might not get another one until the market has dropped 20, 30%. Your second order might be down here, which would massively improve your average entry. So some of these markets we can see, like Bitcoin today, down 20%. Rather than looking to the left and going, hey, there's a little demand zone here, I'm hoping the market will hold at it. What if it doesn't? What if this is fundamentally driven and it just keeps going and going and going? What if we had 6 or 7 bearish days in a row before we had a bullish day? How easy would that be? And what would it look like if we were just to wait until we had a bullish candle and finally we entered on the close of a bullish candle? You might find that you actually don't get an entry, and Bitcoin might be down 35, 40, 45 before you even get that first entry. And the only counter argument I see with this is often traders like, but what if the market just completely turns around and does this? And that's how it closes as a bullish candle. Then pick another asset. There's so many different assets in the market that we can trade in. I've got burnt in the past by looking at something like this, saying, "Hey, this is dropping. Let me just take an opportunity to get in this. This is dropping massively," and I put my first order in here. Oh wow, okay, I'm offside. Market drops. Let me just put another order in here, and we all know how this goes. Okay, market's still dropping. Let me just put another order in here. Bear in mind, when we're in drawdown, we don't often make good logical decisions. Victor, I can see you smiling over there. I know that you know. I'm sure we've both experienced this, right? And by the time you end up sort of like fully exposed, you might be 4 orders in, hitting your maximum threshold, and the market just keeps dropping. And this, or something close to this, becomes your average entry price. And you sit through all of this drawdown. So consider what it might look like if you just said, hey, I've got maybe $1,000. I'm going to put $100 in each time. But for the first order, I want to see a bullish candle close. Doesn't have to be the daily. Could be a smaller time frame. But it's just to offer a bit of a different context as to how we could approach these things, rather than looking at areas from the left that could be subjective, that may not hold price, because this is clearly a fundamental move. So just wanted to bring that up before we dived into the price action. But that's enough of that investing talk. I'm a trader. Let's talk price action. Let's see what we can find in today. What you got for us?
Let's look at EU, and I will leave GU for you. How does that sound to you?
Sounds good to
Let's
me.
Let's look. We have been talking about this for so long. the market has is being playing with us. I mean, as it does a lot of the times, right? We have accumulation of bearish structures above us. This is the monthly, right? Let's start from the eagle eye perspective. uh, and this made us think, or should have made us think, that the probabilities of it going lower are much greater than it going higher. However, we did have a couple of months ago a bullish structure being formed, which was a bit too early after it started moving according to the script it was giving us, which was this move. And the expectation would be that this could be the beginning of a trend, a downward trend. And instead of following that plan, the market formed a bullish order block. And I will be talking about order block today. So stay tuned if you want to learn more about order blocks. But coming back to this market analysis, and it formed a bullish order block, which tells us that the market wants to go higher, right? That did not fit the script. At least that's a deviation. That's something conflicting. So, and at the end of that was this order block that was formed. After that was formed, we did have a possible last month, right? At the end of July, we had the possibility of a bullish engulfing again. And the fact that it wasn't able to close as an engulfing, to me, was one indication of a possible start of a weakness. And if that were to happen, then it would mean that maybe we're getting back into that. We will get that follow through that monthly order blocks were telling us. And instead of that, it goes very bullishly the other way, right? It's going up right now, going into the monthly order block. All right, so that's fine. We just follow price and see what it tells us. If we go to the weekly, what do we see? We have multiple structures. There is a left shoulder, a head, break of structure. However, on this leg, there are no entries on the weekly time frame, right? So that is a structure we couldn't be using for entries or for signals. However, we are currently in another structure within the bigger structure, also on the weekly, which is this left shoulder, the head, breaking off that neckline, and price forming the first higher right shoulder, you would say, making a lower low. And that leaves us with this structure, right? It is on the weekly, this structure to be the last line of defense for that bearish reversal, right? This is a bearish quasi, right? A variant of the head and shoulder pattern, telling us that price might be going much lower. And it is going into that area for the second time. So it's not an unmitigated order block, but it's going there with a lot of momentum, right? The week is still young. This is only the first day. It hasn't even closed yet on the first day. Currently, it's making a higher high, which already tells us that the probabilities of this structure, uh, this market structure, is getting weaker. It shouldn't be doing that. That's one sign. But still, the fact is we do have a reversal pattern on the weekly, and this is the area, right? So if it closes above this on the weekly, then we could start to that's a sign of market telling us that this reversal is getting weaker, and probably it's the probabilities of it forming and actually telling us that and signaling of a reversal will be much lower. So what else do we see? We have it is getting into a entry area on the weekly time frame, so that's very interesting. It has formed below us a weekly order block that we could use as targets if we get a sell signal. But let's not jump the gun yet, because there is nothing here yet, even though we are at a place where it could be reversing to a short entry. It, at least in this time frame, as it isn't telling us anything yet. and it looks like it's going to break it. So we will have to be patient. If we go to the daily, we see big bullish candles telling us that the buyers are in complete control, right? Breaking, I left those order blocks uh, consciously to let us see that it's breaking, and actually there were more than one structures that it has been breaking on the daily, right? That is the market telling us, what it wants to do is breaking bearish structures, right? So we shouldn't be looking for, at least in this time frame, a short yet. What else do we see, right? In this area, that's the area that we want to look to see some signs of a reversal, a bearish one. Nothing in that uh, to that uh, to that case yet, right? And I say yet because I still leave, until it closes and invalidates this weekly order block. We should be looking for that reversal. But hey, price action is what we need to be looking for, need to follow, and price action is telling us that it looks like it's going to break these structures. If we go to the lower time frames, I mean, this is as bullish as it gets, right? And doesn't tell me anything about that weekly reversal structure having any, intent of forming. So there's nothing to be done with that weekly higher time frame setup that I have at the back of my head, wanting to get a bigger time frame on the weekly, bigger time frame entry. And as we speak, it broke that time frame, just letting that order block, just to tell you how bullish this is. This is quite. Let's look at the ATR for today. We are already at 116 pips, right? The average right now for the ATR for EU is at 51, depending on how many bars in the past you're going to use for that average, between 50 and up to 70. And we're already at 116, right? Don't try to be a hero, fade this just because it is outside of its weekly range. When the market, the ATR, right? I talk a lot about ATR. The ATR is useful as long as the market has an average day. Today is not an average day, so the ATR should be used with cautious, right? With caution, because of course you can use it, but you need to understand, if you use the ATR for an area to start looking for shorts, you're not going to be looking at 100% ATR, because that would be an average day. You might be looking at 150, at 200, right? Or even more. And then you start, okay, for the current market condition, you can say, okay, this is extended, because 120 may be extended on an average day. But today, 120 means nothing. It's only getting started, right? So you have to put the ATR, know when to use it, what kind of day this is. And this is, as we have been talking since the beginning of the stream, this is a very peculiar day, a very special day, different day, how you want to say it. It's not the typical day, right? Nikkei going at some point all the way to 12%. I mean, that's not typical at all. Right now, the Nikkei is at -8. So, I mean, that tells you how risk levels are in the market right now. But let's look. What else do we have? If we go to lower time frames, we have the weekly ATR is coming at around this level right now. So that is the weekly ATR, and we already hit and exceeded it within the first day of the week, right? The first day we had the weekly ATR. That should tell us what kind of market we are in, a very volatile market. And the opportunities are, there are a lot of opportunities when the market is like this, but you got to know where is value in the market, where is it too extended. And if we look at the weekly structure, I want to see price, right, before I getting out of this. I want to see how price behaves as it gets above this structure, so above 1.10, round that round number. Does it form? Does it get support there or not? Right. That is roughly at a weekly ATR. If you look at the week, at the hourly, how is it behaving? It just had that big pin bar. It's not printed yet, but it is showing it. Can it hold above this level or not? That would be, to me, the the, the test that that EU has to, pass if we're going to see it continuing for today. That does not seem to be the case yet, but we'll have to see. We have to wait where price wants to go. What I see here is, you know, a lot of risk as a trader, right? So you gotta adjust your risk, your position, take into account that heightened, elevated volatility, very elevated, I would say, as we already hit that weekly ATR. In terms of opportunities, right? The opportunity were at the beginning, as I said, this is the order block that is that would be the entry for me. So in this candle, right after it closed as an engulfing, in this candle at the beginning of London, before London started, when this wick was formed, that would be the entry. It didn't give me an entry, but that's the only entry that I would be looking for, because I want to, as a trader, I want to be in the move, following the trend, but it's already made a huge move. So probably that move is already gone, right? The question is, how far can this continue to go? And of course, there is a trade to be made, but it's not on the H4 anymore. And what else do we have? We have this order block. I didn't trade this because I didn't have a signal. But if you go to the lower time frames, you can see how price came back. And this time around, it didn't get into that order block to get his, to participate in this order block to be used. But it moved quickly to the upside to what we are already, I think the greatest part of today's move is already done, right? So in that term, looking in through that lens, I would say, if you are already in the trend, in the trade, if you were able to pick a piece of this, you need to start thinking of an exit plan if you're a day trader. And if you haven't gotten any entry, going long here looks kind of risky at this moment, because we're getting into those areas, the weekly ATR, the weekly structure. We're getting outside of that. That looks like a very nice squeeze. It's too early to tell anything. That's on the weekly time frame. So I would say, I would wait for price discovery. Where does it form those bearish structures again? And it's not doing that. So I will wait for market to tell us when can we start fading. But that would be in relation to this area. When it is above that weekly ATR, is it starting to form reversal patterns, right? So far, it has a big wick on the 15-minute, but that doesn't tell us that much yet. I mean, it does that all the time when it's going up, leaving wicks only to break them later on. So I would say, I would say be careful. Be careful with today's EU price action. There are opportunities, but don't jump the gun, I would say. Rich, would you like to look at GU, or shall we do that after the break?
What do you reckon? Should I break down GU price action, or should we wait until after the break? Because I got a nice little 1 minute entry. I used to traded this for a little while, done all right out of it, got funded, got paid a few times as well. Market conditions shifted, and today's a really good opportunity to run through it. But should we do it after the break? Should I show this after the break? It might take me a few minutes.
I think we will leave the audience in anticipation for your GU breakdown. Let's take that break and come back, After your market analysis, I will talk about order blocks and tell you all the good stuff, all the benefits you will have as a trader when you use structures, clear structures, as the way I define order blocks, clear structures where where you'll be looking for entries and your exits. Stay
Mhm.
tuned, and we will be back in 10 minutes. And we are back. Beautiful people of our trading community. Welcome back. We are doing the second half of our live stream. We'll be looking at GU with Rich. Look at his insights as to where are the opportunities for today or coming sessions, and then I will be talking about order blocks and all the good stuff that you will be needing for your profitability. Rich, what are you seeing in the market for GU? I'll put up your screen. What are you
Yeah.
looking at right now?
You'll have to excuse me. I just found some ice cream on a break, and having the opportunity to come on and stream with you and have ice cream as well, mate. That's a major win. So, right. So I
That's
said
always
just before
a good thing.
I probably haven't left enough for later. Anyway, moving on. So I said that before the break, I'll share with you a framework. It's a
Okay.
completely rules-based framework. Doesn't have a lot of subjectivity to it. It's just I'm going to follow a set of rules, and this is a profitable edge. However, with this edge, it drops in and out of profitability. So there's certain little filters and nuances that you want to learn within it. But one really, really simple thing I used to do, I was doing this I think about 3 years ago. And so just quickly, I've been trading 6 years. First 2 years lost a lot of money. Third year managed to break even, start making little bits. And for the last 3 years, I've been profitable, and it's always been around the same kind of concept. So Victor's going to talk about order blocks a little bit later on. Order blocks have been so crucial to my trading. But I discovered order blocks a little bit differently to how most other traders will know them. And I use them a little bit different. So what I used to do is I used to mark up significant highs and lows, and I would be looking at the 15-minute chart. So what I found is often the market would love to come up to highs, and it would just print very, very close to that high. It would either go above it or below it, and we would get these reversals. And so when you scroll out, you can see these reoccurring themes that the market very often likes to come close to previous highs and lows. And it often makes these movements before reversals would happen. So another example would be down here. I'm not going to bore you with every single one, but very often the market would attempt to move in a direction. So we can see that we're moving lower. The market would attempt to go higher by multiple bullish legs and then come down, equaling or getting close to this low, and then would push away. Now, in some occasions, the market would come down and would do this, and then it would move away. And I'd be, okay, so this was a point of interest. And in other occasions, like this one, the market would go and do this, and it would come just little bit lower. And there'd be obviously the times in between where it do this, and the times it fails would be the times where, hey, this was a significant low. I think it makes sense for the market to do something like this. We saw that the EU done this a little bit earlier on today. So I was always marking up highs and lows of 15-minute charts, and they're super, super easy to find. Anywhere basically the market has turned away and driven higher. Oh, this was a low, and the market moved away. This is a low, markets moved away. This is a high, markets moved away, and vice versa. And I would follow these areas, and what I would do is I'd wait for the market to come to these price points, and I'd be looking to try and formulate a trade idea. The trade would consist of one of two things: either a break and a retest for the market to go higher, or a run on liquidity for the market to go lower. So there's two simple patterns I was looking for. Pattern number one would be this. Pattern number two, I'll draw it from here, would be something like this. So I went through over 300 examples, and as much as I'd like to say I've done the work to save you from doing it, no, that's how I learned, by doing the work. So what I'm about to share with you, you use as clues, but then you would have to go back and you'd have to mark up hundreds of highs and lows and formulate your trade ideas and keep a score and see which ones make the most and which ones fail. So first of all, I was looking for these breakout trades. And all I was asking was, how many times does the market come into a significant high that I've marked out from the left? How many times will it break, pull back, and go higher? Euro USD today was a really good example of that. And I would keep a track on how many times I could break out and trade this to the high side. So I was like, okay, I need a set of rules. So I've got this thing that I know to be true in the market. Market doesn't get, all the way from down here to up here without something happening. So there must be buyers down here. And later on, I found out that actually buyers is the same thing as sellers closing positions. So it's not something that I've spoken about before, but I'll draw a wonderful diagram to try and illustrate my point. If we have a seesaw, this is a lovely straight seesaw, and here's your pivot point, and you put a piece of weight on this side, this seesaw is going to move lower. It's going to push down on this side, and eventually it's going to look like that. Ignore the lines. I'm not an artist. But eventually this will push like this. Now, that's how price moves. In my understanding and my interpretation of price movements, that's what happens. Something happens on this side. Now, to even it out, we can put weight on this side. But what I started to think about was when this seesaw, and I wonder if I can just move this down ever so slightly to, no, I can't move this. I should have done it with a straight line. Let me just do this quickly because it'll make sense. So we're looking to add weight on this side. And when we do, we're looking for it to pivot and price moves down because there's been a bunch of orders placed on one side. And then what we're looking for is orders to be placed on this side, more orders to be placed to bring this back into balance. So if we put the same amount on this side, all we're going to do is just effectively bring this back to balance. You can see I'm an absolute pro artist at this. But the theory behind it is if we want this side to move down, we can do one or two things. We can add more orders to this side, or we could remove this. And if we remove this order, we're going to replicate the exact same thing as moving this to the downside. So forget the lovely illustration from my diagram and think about the theory of price movement and how price moves. It is not going to get from down here to up here without either buyers coming in and placing orders within the market or sellers closing huge amounts of orders. And this is why I trade supply and demand, because I love to follow structure. I love to follow what is price doing now and how can I get involved. So when we look at this high here, the market only moved lower because sellers were willing to add to their positions or buyers were willing to close out. And what I'm doing is I'm looking at what I believe buyers and sellers are doing. Where are they putting their orders? Where are they willing to add to their positions? Where are they willing to get out? And I started to notice that the market would often go to highs and reverse. And it actually did it more times than breakouts. So I found that this pattern here, not only was it a profitable pattern, it happened more times than a breakout. So my next job was to try and figure out how can I build a framework that I can just put alerts on these highs, go and do something else, hear the alerts, run to the charts, and then take a trade. And so what I used to do was I used to mark up these highs, put an alert, and I would drop down, and I'm one of these traders that would drop down to the 1 minute chart, and I would try and formulate a trade entry. Now, this is a proven profitable system. I have spreadsheets with hundreds and hundreds and hundreds of trades of how I approach this, a track record of getting funded, a track record of getting paid. Now, as I said in the beginning, all that sparkles is not gold. This did go through a bit of a big drawdown, but I'll go on into that in a sec. So markets come up, equal this high, and has started to pull back. Now, my job is to try and figure out, is this a breakout to continue higher, or is this a reversal? Now, what I need to do is I need to wait for a reversal when the market has gotten below the last set of orders. This is what we talk about when we talk about order blocks. It's where blocks of orders are in the market. So at least that's how I interpret it. So I'll follow this move back. And what I'm looking for is a good amount of volume where the market went higher. Would be this area here, or it would be this area here. So I start marking out these areas and saying, if the market can push back and break under these levels, I've got confirmation that there was more selling orders up here than there were buying, because the buyers were buying here or the sellers were closing their sales here. Either way, the market pushed higher from here to here. So what I would do is I'd mark out these areas. I'll say, well, maybe it's here. Maybe this is where the buying orders came into the market and pushed up to fill And I'm not going to go into the narrative on it. ICT covers some really good concepts on order blocks and why things would push into price points. I've got my own theory on it, but it'll take a little while to break it down. And there's no guarantee that it's correct. But I believe the market is pushing up here to fill institutional orders. And I believe the way it does it is by adding orders to these price points to drive up. The algorithm fills the orders and just matches buyers with sellers. Is it deliberately trying to stop punt? I don't think so. I just think this is where the orders were for the market to fill enough orders and pull back. So this is what I care about. This is where the buy orders were placed. They were either placed here or here. In one of these two areas, they were placed. We could look at the bearish candle or the bullish candle. But I believe that's where the buy orders were placed. So my job to try and pick a reversal would be to wait. And I would wait until the market could push lower. I'd do nothing. I'd still wait. Many traders would go, hey, this is an MSS, a market structure shift. We're not going to go into that. And I'd just wait. And I'd wait for the market to finally, if it's ever going to do it, break and close under. And what this would do was this would give me two bits of information. Number one, we had active buyers here that put the price up to here, but now we're down here. So surely that means that there were more sellers in this price point or more buyers willing to close their orders and take them out of the market. Either way, we have an MSS. We have a market structure shift. So you can be super aggressive with this and follow it back to the last bearish candle. I've got a video on my channel where I talk about how I read market structure to stay profitable. I use this exact concept. And all I'm looking for is a break of the last bearish candle. Now, in this occasion, this pullback here was 4.5 pips. A little bit aggressive. So I would wait for a lower structure point to be broken, probably a 5-minute down here. And that would show me that the market has now shifted from buyers are in control to sellers have taken control of the market. So when Victor talks about who's in control of price, I'm using simple structure to formulate trade ideas of who's in control, when has that control shifted. And when I get an idea that the control has shifted here, all of it here becomes a huge zone that maybe I want to sell from. Why? Because higher time frame tells me it's sold from here in the past. Market has sold from here in the past. Institutions may have sold from here in the past. Maybe they want to protect their position. Maybe they want to cover it. Maybe they want to build orders. Maybe they want to add to it. So my job is to sell this when I get confirmation that the market goes lower. And so my trade idea would look something like this. Here's my entry. Here's my stop loss. And I would attempt to follow the market down and see if it could move into profit. So super easy, super mechanical, and super rules-based. And if the market continued to go higher, much like this, I would say, okay, maybe it's more likely that the market's going to now break out. So there was this little bit of this little bit of discretion as to where I was working out, is this a breakout where the market's likely to now pull back to this previous high from the left and go higher? Or is it actually going to start breaking structure points? And when I found out that these structure points here were lower than the price action from the left, I found out that it was likely the market was going to reverse. To give you some numbers, I traded this, over a 4-month period, I was up about 80R. So if you're risking 1% of trade, you do the numbers on it. It's pretty decent. However, I went through a drawdown that was significantly, like 25, 30R drawdown. So the market kept coming back, faking these lows and then pushing higher. And I later on found out maybe it's taking liquidity to fill its tank up to go higher. So super easy rules-based system to get into the market and just try and formulate trade ideas like this. And keep an eye on these price points. Because one thing I found when I was doing a study, what if I moved my stops to break even? I actually found not 9 times out of 10, but I found that these price points were significant. Market loves to play off these price points. An example of that would have been this. Had I decided that here was my low and I was waiting to try and follow the market down, this would have been my entry candle. And my stop would have been on this high where I'm wrong. If this was my entry, what I found is often markets love to come back and tap break even. And go study price action. You'll see the same kind of things over and over again. And so I noticed these patterns and I was like, how can I use these to get funded, to stay funded, to be profitable and to get consistent payouts. So these are the kind of concepts that I started to learn 3 years ago, and they were showing me blocks of orders in the market where institutions may have been in the past, which is what I understand today to be an order block. And when we get a candle that comes up, takes a high, closes lower, I believe they're called breaker blocks. So I have my own interpretation and my own understanding of it. But what I noticed was that sometimes market wouldn't take highs and lows. So here's an example where the market sells lower, comes back and couldn't make a new high. And so I started to look at these areas and be like, well, what's significant about these areas? And I started to understand that these are areas that we could identify as, let's just see if we can pull this up, order blocks. Market back, and this is the last buying attempt in the market to go higher, and then the market sold off. And I'm like, there's a block of orders here. There's a commitment from, or there's a shift from buyers to sellers. So super easy rules-based system of just following market structure and then just seeing how these price points behave when markets come back. So these are the kind of 2 price points that I think are significant. It's the last place where there was an attempt for buyers to go higher. They broke these highs here and here, and they sold lower. So I'd be super interested to see what happens at these price points when the market comes back to it from today. So I'm just mapping out where were buyers, where do I anticipate they're going to be in the future, where do I think they're going to be willing to adjust their trades and their orders. I've got no idea if these price points hold, but I'd be looking for the market to come back and potentially defend these areas here. And I've seen it so many times where you formulate a short idea, we'll put it in the middle for argument's sake, and the market will sell off, produce a little bit of profit, and traders go, I don't want to lose. Let me just pull my stops to break even. Think about what you're doing when you're doing that. You agreed to sell at this price point. When you come out at break even, you're agreeing to buy. You're agreeing to close your sells and switch your bias to buys, even though you're market neutral. So when we think about that seesaw, this is why I really don't like a break-even rule. It's not profitable for me. It's more profitable for me to double up on these entries when markets come back, which was for a little while part of my trading plan. So I'd be looking for the market to come down and do this. Why? Because sellers sold there in the past. If the institution push up and sellers are willing to bail out their trades, that's closing sales. What does closing sales do? Adds buying pressure. And if the market doesn't go higher and does that, then that tells me there were more active sellers in a place where I anticipated there would be buyers. So it's all kind of just looking at the psychology of traders, how they would behave around wins, losses, stuff like that. I have no idea if these price points hold, but these are the kind of reasons why I look at price the way I do. And what I later on learned is actually, if you take this and just pull it all the way back, now you've just got a really simple supply and demand trading system. So I went down a rabbit hole of learning about smart money concept and ICT. I spent hundreds of hours learning about all these concepts, and they do work for some traders. But I had to kind of find my own way to understand price movements and interpret the way the market actually moves. And it's kept me. It does all right. I managed to formulate trade ideas. I make a little bit more than I lose. And the trick is to always put your stop in a place where you're wrong. And that would be this high. And if the market comes up and takes this high, it will give me more information that there was more buyers down here than there were sellers. So this would be what I'd be looking for when it comes to a trade idea. There we are. We're actually at this price point now, so it'd be interesting to see how these price points hold and see whether or not the market defends these positions. And you go and study this stuff, and you do a little bit of back testing on it. I'll say a little bit, and you do thousands of hours of back testing on it. You'll find that these points become significant, and I'm sure that's what Victor will now be able to explain about price points being order blocks and kind of that mutual ground, I guess. But sorry if I went a little bit deep on that. There's no quick and easy way of explaining technicals sometimes.
No, nothing to apologize for. We're the viewers, me included. We enjoy every little piece of it. I mean, that's what that's what our community is about. It's about sharing our insights, and try to learn from each other, because that's the way our community works as well in Discord, right? We learn from each other. We have those calls in the Discord, sharing our experiences, our things that didn't work out always as well, and learn from our mistakes and to learn from each other. I think it's a very nice breakdown, Rich. So this is current price, right? The That's where price is currently
Yeah,
at. Yep. And so
yeah,
you're
that's where price current.
thinking, yeah, you're thinking. Let's see on. You're thinking. Let's see. There is a. We're coming into an area that the price has previously shown us that it wants to be sold. Right. That's the
Hmm.
move down. And you think, okay, so if it's shown us that previously, it's probably going to do the same thing again, right? That's
Yep.
the rationale behind it, right?
Yes. Yeah. I think as we're creatures of habit. Every day you'll put the same shoe on the same foot first. You'll open the door with the same hand first. You walk down the stairs with the same foot first. And what do traders care about? Money. They're managing risk. They're trying to make more than they lose. They leave footprints. They leave clues, and they leave behavior patterns that I believe they're willing to adjust. Could be algos are coded to manage risk around these price points, but the kind of my thoughts are, if I'm in this from here, which is where I would have got in, I would have got in here, and I would have been selling this lower. I'm going to make sure that I'm not moving my stops to break even, because how do I know that institution didn't push up, fill shorts here, fill loads of shorts here? They haven't filled all their shorts and they want to fill more. So this now becomes a really nice zone all the way up here that the market has sold from. And my job is just to say, well, that's where I want to sell. Kind of, I can't move markets. I can just join in on these movements. But if the market sold from here in the past, I'm anticipating there might be more orders, because especially if it's moved far enough that it couldn't fill all its orders. So my thinking is, well, if you've got, a couple of things you want to sell and only one buyer and you can only sell one, you're gonna wait until you can sell the next one and the next one. And we're talking about like what institutions and how they manage risk and how they would trade. And if they're willing to trade and transact in these price points for whatever reason, I don't know. But what I'm looking at is price moved enough, which is why we talk about fair value gaps. Price moved enough that maybe there's more orders waiting to be filled up here. So you can keep this super, super simple and just put big zones up here and just call it supply and demand trading, because essentially that's all it is. You can teach this stuff in and out in under probably 2 to 3 hours. There is a few nuances in it which makes it a little bit more complex, which is what I later found out. So you've already got the framework. That framework got me funded and done really, really well. But the market isn't in a habit of handing out free lunch money. And if something works after a while, we can find that market conditions can shift. And when it shifts, we've got to figure out, well, how can we still be profitable within it? So I use that attempt or that opportunity that I had when effectively I failed in trading. I took a 30-yard drawdown. And I used those opportunities to go back, study those trades, and say, what if I'd have done this? What if I'd have done that? And then later on, that was chapter 2, chapter 3, chapter 4. But that's the concept I used to become profitable for the first time. I'm probably on about chapter 9 at the moment, and I'm sure there'll be about another 30 chapters to learn after that. But yeah, that's why I enjoy studying price action and just watching markets. Like you talked about earlier, price discovery. How does market moves and why? And then how can we build a risk adjusted return on that as well?
Yeah, we never that learning process never ends as a trader. I mean,
Mhm.
in many profession that is the case, right? The science, the our knowledge, is constantly being expanded with scientific research. And without going into that route, that argument, but in trading is no different. We keep on learning as a person as well. You there will always be the next challenge. Always there's going to be, you gain some knowledge. Okay, so
Mhm.
now you understand, let's say, how when price runs a structure or
Yep.
fakes you out. But then that's just one thing. Okay, so now you can recognize that the next challenge is perhaps, okay, how do I get in? How do
Yes.
I avoid them? How do I manage risk when this happens? And so on. So there's a never ending process of learning in trading. But your point is of course you're talking about, you mentioned blocks as well, and I'm going to be sharing what order blocks are, at least to me. and that gives us the a great introduction, because the concepts you just mentioned or you talked about are not very different. I mean, it's not very different from what I'm going to be sharing with you guys. Let me show my screen for a little while. Okay, so this is the current price on EU. And before I start with on order blocks, we identified earlier on the technical, on the market analysis, this being a great place for price, to stop, as it is the weekly ATR, right? It is not usual that on the first day of the week we already reached that. So it's going to be a reference point for a lot of people, right? It's going to be the test, as I said. Is price going to form bullish structures above it or not? By to the degree it does that, it is telling us it is ready to continue to to go higher. And even if you go to the weekly time frame and draw a line from the previous weekly high or high of this candle before us, right? If you do that, and if you go to the lower time frames, you will see that those two lines, they coincide, the weekly ATR and that previous high on the weekly. It's not a swing high, right? It's because on the weekly it's not a swing high, but it's still a place which was uh, sold previously in that candle. In any case, right? Price tried to go up and was rejected of going much higher, and it went lower, leaving that wick behind. So it is a place, a point, price point level where sellers came in, and that's the importance. The When you have multiple uh, indication of an area being important, not only the weekly ATR, but also a level that was previously sold in the past. And now we're getting there, and you can see already that, at least in this time frame, that the price doesn't have difficulty breaking above it. Let's see how it closes. But we'll be, and if I go to the, if we look at structures on the 1 minute, right, on the 1 minute, this is the neckline, right? This would be the head, that will be the neckline. Price did not break that. And if we look on different time frames, the neckline would be, let me see, on at least in my way of doing things, which may be different for everyone, my neckline of 5 minute will be much lower. If the price is not breaking those necklines of the quasis or the structure, if it's not breaking structure, it's not going to go lower, right? It's indicating the strength, and that's the way to be reading market as it is developing, as it is discovering what it wants to do. But let's start with order blocks, right? So it's a very common term used in ICT, and a lot of people use it in different ways. I would say, if you look up the definition of order blocks, you will see that in uh, the institutional trading a long time ago would have areas where there are blocks of order, right? Where a lot of transactions are happening in comparison to other price points. And these were, what would, before it was popular as order blocks and OB, this would be one of the definition that was used before. And in around about 14 years ago, if you look at if you look it up, you will see that it's an ICT start using it in a different way, right? And I I would say it doesn't matter, who coined it or why, how they use it necessarily, as long as you understand why it works, right? And how to identify them and have a consistent approach to it, right? But before we do that, let's do. I have a specific way I look at order blocks, right? And to me, I know there are people who disagree what is, because you have breaker blocks, you have mitigation, unmitigated order blocks. I try to keep it simple, right? To me, order blocks are just two candlestick combination, two types, and I'll go through them. One is the engulfing, right? And I'll show you guys what an engulfing is for everyone else who is new to our industry or new to trading. Engulfing and outside bars. Now, outside bars can be engulfing as well, and a lot of times they are, but there's a reason I mentioned that specifically, because sometimes they're not engulfing it, and those are equally strong as order blocks as well. All right, so let's start 101 candlestick uh, class, if you will, right? For everyone who is new, this is for, to start at the beginning of, let me take that off. So every candle, right? Very simple. Bear with me. Have some patience for everyone else who already know these concepts or these terms. Every candle has an open, right? A close, a high, and a low, right? So 4 data points on every candle, and every candle represents one period in time, right? A specific fixed period. Like in this time, it is 5 minutes. So if we are looking at this order, this candle, right? You'll have, since it is a bullish candle, right? It's a green one, as that's what I said, for price that end up going higher than it's end up closing higher than it's open. You have the open. The open is the beginning. Let me say, let me share this, right? So you have the candle has a body and a wick. Every candle has, well, except dojis, but most candles have a body, and they normally have a wick. What are the wicks? The wicks are these narrow lines below the thicker area, right? That is the body, right? So the how is the body formed? On every candle, of course, you have the open and the close. The open being, as this is the bullish bar, the open is being the lower part, lower extreme point of the body, which is this thicker part of the candle, right? The candle being everything, body and wick, right? And what do we see here? Price goes lower, right? Because this is the wick indicates, the lower wick indicates the low of the candle. But as it closed before, we know that as it eventually closes higher than the open, we know that we consider this a bullish candle, right? And in my chart, this is indicated with a green color. You can have different colors, of course, depending on your chart settings. But before it closes, of course, it can have an upper wick. In this case, it didn't have one, or it's very, very little. So basically, a candle is a graphical representation of how price developed or moved from the open to the close. So it opened here, went lower, went higher, the highest point being that little wick there that is almost invisible, right? And then close at that high point. Okay, so that's a candlestick. Nothing too fancy, nothing too complicated. Okay, so what is a order block? An order block is for some people, right? Especially those that use ICT concepts, and it's fine if you doing that. Don't think that this is a criticism against that. A lot of the times, a order block is considered the last candle, right? The last candle before it has an impulsive move, right? That firm in a bullish impulsive move, it's the last bearish candle, right? Before the move. I have a different, more simple way of looking at order blocks. And to me, as I said, they are engulfings. And what are engulfings? Engulfings are when one candle, right? When the body of candle number one, that's this first arrow, or this candle indicated by this arrow, when the second, right, the next candle has a bigger body, right, in the opposite direction, right? So you need to have that change in direction. This being a sell candle, a bearish candle, and a bullish candle, of course. So a buy. So basically what happened here is price opened in this candle and went lower, closed here, and the next candle, it formed this, it opened here and close much higher and leaves that difference in body, right? Now, the size of the body tells us something. Okay, so the size of the body is a gauge of buying or selling interest, right? Because that's how price moves in the market, right? If there is a lot of selling pressure or selling interest, the price will tend to move further down, leaving a bigger body of in a candle, right? So basically what you're seeing here is that this is the building block, right? At least in this time frame, the building block of a point of control. Okay, so why do I say point in control? Because what happens here is that one side, the one that wins that little battle, one side won and took control, right? And that is, to me, what makes it interesting, especially if we go deeper into the psychology of why an engulfing is significant. Why is it important? If you think about it, imagine you are a trader, right? And you are trading in this candle. Doesn't matter if it's a 5 minute, it's a 1 hour, does not matter. It can be a day, it can be a month, it doesn't matter. But let's say in this candle, this red one, right? All the market participants were convinced, right, that price is going to go lower. Their expectation of price is that it would go lower, right? They thought the fair price is lower than current price. That's why you sell something, okay? So in this case, all of them were selling as that 5 minute, in this case, as that period was progressing, right? So at the close, everyone who participated in this candle, not everyone, but I mean the majority sold during this. The sellers were dominating the the transactions. That's why price went down. In the following bar, what happens? All of these, they they went lower, right? And it comes back. And what does price do? Price goes lower again. And probably how does price reach this and form this wick? It's by selling pressure after the open, before the close, right? Because the close is at the end of the bar, of course. As it is going down and people are selling, thinking, right, I did right. I predicted or I expected rightfully that price is going to go down. I am right. I am in profit. They keep on selling until the market switches and the other side of the market takes control, because everyone else who sold, or everyone who sold and is still holding that position, as the market is coming up, will start to feel fear, right? Because they no longer they profits evaporated, and maybe they're already in a little bit of loss. And as price is pushing against their position, if they didn't close it, and a lot of traders, just hope that things will turn out to be right, right? If they didn't close this, by the time this closes, they realize they're on the wrong side of the market, right? They're in loss, they are in pain, they're uncomfortable, and they want to get out of pain, right? Getting out of pain is more important than winning at that moment. When they got in, they didn't think about the pain, right? They thought, I want profits. I want to win. But as they are realize, oh my, I'm on the wrong side of the market. I need to get out. I want to get out of this pain. I don't want to be, feeling nauseous with my loss. So what do they do? When price, and that is why I use my order blocks are, and I say but my way of doing it is using the open of bar number one, the low, in this case, as it is in bullish engulfing, the lowest point of these two candles. So it can be the first one, but it can be in this time around, it is the second one. That is the area to me where they they were still comfortable, the sellers, right? This is the 5 minutes, so I'll put on a 5 minute order block. This is the place where they were still comfortable. So what happens when it closes? That candle closes, and then as engulfing, they realize they are wrong about the market. As the market comes back into that area that they were still comfortable, that they they if they enter at the beginning, they will start getting close to break even, or they may have a little loss. And as they realize that they can eliminate that loss and be out of pain, they will close that position. Well, of course, there's a lot of things happening. This is just one side of the market. There is the other side, which are the buyers, right? What I just explained is the sellers, right? The sellers mentality, those that are underwater, that they close their position as it comes back into that area that they entered, right? Roughly. The other side is, as the market always has a group sellers and buyers and buyers, yes. The buyers in this case, everyone who bought this candle, right, and are in profit, as they realize as well, they see the same thing, that the buyers took control, right? This is a buyer's market. Price is going to go higher. So what do? As price comes back into this area, right, lower prices, they see this as an opportunity to buy. They are buying at a discount. So as price comes back into this order block, they are willing and able to buy. If they bought already, buy more. And if they miss the initial move on the second candle here, right, the first bullish candle, they certainly will want to participate in the following candle. And as price comes into an area of discount, they start buying. And the sellers, remember, we had the sellers getting out and we have the buyers getting in. So you have the perfect storm where both sides of the market participants, they agree that they want to be, to close a sell position, you have to buy it back to cover a sell, a short position. So the sellers are buying to close their short position, and the buyers are buying. So you have a perfect storm where both of them are buying, and that results typically in a move that goes the direction of the order block that was created in these two candles, right? And that is the psychology behind order blocks. And the way that I mark them is by using the open of the first candle and the low of any of those two, the lowest point of them two. And that is, to me, the order block. And I don't make a distinction that it has to have an impulsive move, because basically, when I use this definition, this very simple definition, as it being an engulfing, I already have my order block being formed and created at the second bar, since I don't have to wait for that impulsive move for me to define it as an order block. So I can get in on the moves at the right after it is being created and profit from the immediate reaction, right? Because price will tend to come back later on to that order block, but I can participate in the immediate reaction, right, on bar number 3, as well as, let me get this a little bit bigger, as well as when it, let me get this, as well as later on. And if you think about it, I trade only two concepts, order block and quasis. And order block to me are just places where one side took control. And as Rich say, very rightfully so, that we as humans, we're creatures of habits. And if they did it in the past, right, buy at a certain level, if here at this particular point in the market, the buyers to control, when price comes back to that area, they're likely to do the same, right? It doesn't work all the time, but that in general is the tendency of the market. There will be buyers there to buy. Will it be enough to push price up? A lot of the times it is, but not always, of course, right? So, and What is that? What did I just define? It's a demand area, right? And if you flip that up for a bearish order block, it will be everything upside down, right? You will have a supply area. So basically, when I trade order blocks, I'm trading supply and demand, which is comes back full circle to a very traditional, long known way, which is nothing different than supply and demand. And to me, that's what order blocks are. There are points in the market where market left indications or hints that buyers will be here, buyers to control, and are likely to be there as again. Now we see price coming back into it, right? And we could see, well, actually, we have an example of a, this is live. So we have an example of a bearish order block that was retested. And that's how I traded basically. I didn't tell how I use them, but I wait for the order block to be formed, right? That engulfing. Price comes back into it. This is the move that price wanted to, that price did do, right? They sold, they had, that's the engulfing, and it comes back to retest that newly formed fresh order block and moves away. And what I try to do is, and when I see that order block forming, I try to participate in this move, the third move. The first one is the one that creates the order block. The second one is the retest, and the third one, that's my move, right? And this happens on all time frame, from the monthly all the way to the minute and even to the seconds. Now, what is nice of this? I didn't, of course, I didn't plan this, I didn't know this, but what is important is, and it's not as easy like order block and that's it. There are nuances, the same as Rich mentioned. You will see that this is just one level, and there are nuances to make this profitable, to navigate the market. You will have to use top down analysis, and I didn't touch upon the outside bar. We can touch upon this in our next session perhaps. But those two things are to me order blocks. Inside bars, Hamed asked, I don't use inside bars, right? So I keep it only to engulfing and outside bars. And very quickly, what are outside bars? Outside bars are, in this case, it is an, I'll do it very quickly. Outside bars are where the second bar, right, not only is it engulfing, although it's not always an engulfing, but the second bar, this bar, right, we're talking about these two bars. Let me indicating for everyone. I'll make it bigger so we can see this clearly. When the second bar, that being that big one, the second one not only takes out the lower point of bar number one, this is bar number one, right, indicated by that lower yellow horizontal line, right? It takes it out. Look at that wick going all the way. I'll make it bigger, right? It goes lower and then closes above the high of the bar number one. That's an outside bar. And that is basically an engulfing on steroids, right? Because it is clearly showing that who is in control. It's a much more stronger candle, and I use both of them for the creation or the identification of order blocks. And I keep it consciously very, very simple. And I identify or break down the market by the way, the degree, the frequency it creates bullish and bearish order block, and to the degree it invalidates them, right? It breaks them, because that's a sign that the market is shifting. It's no longer when it starts respecting the structures that it previously was respecting. And before we're getting close to the end of our live stream here, but this order block on the 5 minute, which is a low time frame order block, so I don't trade it just because it's there. I need to have higher time frame order blocks, and then we can look at that. But this kind of price action is very um, re- the fact that it is reacting to this place, to this price level, is relevant because it is doing it at a level that makes sense on multiple for multiple reasons, right? And we mentioned this at the beginning of the stream. It's the weekly ATR, right? And it's a previous high on a weekly candle, right? On the lower time frame, those things can be very significant. And now the market is showing us reasons or indications that it indeed is reacting and rejecting this level. Will this be all it does? Maybe, but for that we need to go to the higher time frames, and on the hourly there's nothing happening yet. This doesn't mean anything. I would like to see something on the higher time frames showing me a higher time frame rejection before I start assuming that this would be the reversal, right? I want because those higher time frame will increase your win rate, because those higher time frames are respected more often than only the lower time frames. But we can look at something on the 15 minute. I don't see that rejection yet. There is a bearish order block that was broken, right? It hasn't closed yet. There's still 1 minute, but that's a bullish sign, right? See how I use the invalidation of a bullish structure to be a sign, a sell sign, right? A sign that it's getting bearish. But we'll have to see how it closes. It's the first indication that maybe we in any case, what it's showing us is deceleration of price action. That's what it's telling us. Doesn't mean it's going to be a top yet. We'll have to, it has to develop further before it, breaks those structures.
Yeah, Victor, how that
And I
closes
think,
might not be that significant. In about 15 seconds, we got ISM service PMI coming out on the US dollar. So we're likely to see some pretty big volatility any second now. So these
you're right.
levels
Yeah,
may not
15
hold.
seconds for high impact news. For everyone who is trading the high stakes account of the 5ers, bear in mind that you are not allowed to open any trades 2 minutes before the release of the numbers and 2 minutes after. There you go. I think that's the move. You can see it. Let's go to the 1 minute. That's the reaction, the initial reaction of the market. But it's too early. And as I said, this is only a 5 minute structure, which doesn't mean a lot on the grand scheme of things on, let's say, during the day. So a 5 minute is not that significant. I would say at least an H1 structure, but an H4 would be, is the building block, at least to me, for my intraday trades. How is
Yeah, awesome.
GU going, Rich? Any movement on your setup? Is it
Yeah,
any
we
that
gapped down a little bit on that, but I wouldn't have held this through the news. We got a little bit of an interesting price action on this second entry. So we come into the first one, this level here, we stalled around. We come into the second one, we oscillated around this, and anything after this candle close here, I think is just randomness. So market did gap down, pushed a little bit lower, but I would have been out of this trade round about here. I wouldn't have wanted to have held through this news. So it's nice that we saw a little bit of selling interest coming into the market round about this price point. It just showed me that sellers, they weren't done in this zone yet. So it's a good opportunity for the markets to move lower, start to create bullish structure, come into this. What happens from here though? I'd have to drop down time frames. Price action so fractal, we can apply these concepts right down to the 1 minute, but without context of where 1 minute price action is, I find it's just a heads or tails game. It's just like a 50-50 minus commissions, spreads, slippage, swaps, all that kind of good stuff that comes with it. But higher time frames typically for me are king. This works on 4-hour charts as like a framework of where we are in context, then down to the hourly. Execution on 5 minute and 15 minute normally keeps me out of trouble. Occasionally I do look down at the 1 minute and I'm like, what would this look like? What would this look like as a trading setup? If we look at Euro USD ever so quickly on this, and we saw that the market rallied out of this. If we look at the 1 minute, and what I like about this is so mechanical. You can just follow this move back. Hey, here's the high I was interested in. Market rallied higher. I'd need to see a break and a close underneath the last selling activity, which would be here. We couldn't do it. Market continued to go higher. Okay, no trade. I wouldn't be interested in selling this. Why? Because we are now above this price action point from the past. Price has shown me that it defended it. So we can almost look at this and say, well, look, actually, this now becomes a nice zone that I think is more likely to hold a second time. And if anything, maybe take this low, which I think is what we saw. Market come back, took this low, and just ask yourself, how many times will you see this stuff where this will take out significant structure points before making extended moves? It's like that's where it goes to the gas station. That's where it's going to fill up its tank. That's where the orders are. That's where it needed to move to find enough willing buyers to go higher. And then we jump to the 15-minute and we can see just nice little break and retest. Market just comes up, pushes down, wait for a nice bullish candle close on the 15-minute. There's your entry. No need to FOMO, took liquidity from this side, showed me everything I needed to know about price. Lovely little move to the high side. And we can see if we follow it back on the 15, we can actually see that we're now taking this low from the last bullish drive up. So now we can start asking questions like, is this the reversal? Has the market finished here? Where would buyers be? Where would sellers be? How would I participate within this? And there's the fuel. There's endless amount of frameworks we can put together for this. And it's just, as you said earlier, it's just simple supply and demand trading that's been there for years and years and years. And just trying to guess, where's that level 2 data? Where are buyers and sellers willing to adjust, add to positions, remove positions, and hopefully move price as a byproduct, and then join in on those anticipations as well. Yeah, it's a fun little game once you start looking at the market through this lens. You never get bored. You're always sort of seeing data and interpreting something, but then you got to backtest it. And you got to figure out what's the most profitable edge and framework. Quickly, I'll leave you on this. I done a call on Friday in the 5ers Discord, and we were talking about when you identify your trading edge and you see your trades, how do you execute on that relentlessly, without fail, every single time? So if we go back to this candle here, which is where the trade idea would have set up, just back one more candle into the, we can ask good qualifying questions, and it's a little bit of a psychology hack. So if you find yourself struggling in your trades and you're like, hey, you know what? I know my analysis, I'm great at reading price action, but there's this massive gap between what I should be getting and what I actually get. I break that down into 3 simple questions, and this fixes everything in trading. For me, everything in trading outside of technical analysis, this will fix. So I will look at this. I'll be watching this candle close. In a candle, let's say I've got 2 minutes for it to close. I ask myself this one question. Is this a valid trade according to my trading plan? And it should be a simple yes, no answer. If the answer is no, no problem. I do nothing. If the answer is yes, I then pull the trade and I mark it up. I don't pull the trigger yet. And I say, okay, well, I would enter on this candle close. My stop would be just under this low, and I'd be targeting into these highs. If I took a loss on this trade, would it still be a good loss? So if the market was to turn around from here and push down as soon as the candle closes and done that, would I make an excuse and go, oh, I didn't mean to do that because price action done this, or I should have done this? If the market comes down and loses right now, would it be a good loss? And it's a yes or no answer. If I can answer yes to this, I've got, this is a valid trade according to my trading plan. Yes, tick. If this goes to stop loss, would I be happy this is a good loss? Yes, tick. I have no reason to do anything else than just pull the trigger on this. And I've already accepted the loss by saying, if this goes to stop loss, would it be a good loss? Because I'm not priding myself on the outcome of the trade. I'm priding myself on my objectivity to execute on my analysis. So what I'm doing is I'm not looking at my emotions as feedback on what I should do. I'm looking at the trade and saying, is it valid to my plan? Yes or no? If I took a loss, would it be a good loss? Yes or no? If the answer is yes and yes, I'm going to pull the trigger on it. Job done. And then when I'm in the trade and the market starts to do this, oh no, we've got bearish candle. maybe I should just close this. We all know what this feels like. We all have this inner critic that gives us feedback, and our emotions are always trying to get us to pull on our actions and try and do something within the trade. The last question, the third question I asked myself, has anything changed? No. Still a valid trade. It still would be a good loss. There is nothing that can happen within this price action other than holding through the end of the day or closing trades in a red news event. Like, I don't hold trades through red news events. So all I've got to do is just say, is what I'm about to do going to follow my trading plan? And I do the same. Okay, we're back to break even. Okay, now we're in profit. Now, some traders will experience, oh, I want to just grab this profit. I'm up, maybe I'm risking $1,000 on this. I might be up $500 now. Think what that could do in the real world. Our mind loves playing these tricks with us. Ask yourself that question. Is what I'm about to do in line with my trading plan? And it should be a clear cut yes, 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 every time. And you sit in that trade until it goes to your take profit or your stop loss, or you manage it in accordance to your plan. And you have just found a way to bypass everything emotional. And you just sit in the trade and it go, oh, it went to take profit. Do I care? No, it's just one good win. I will go and record that in my data sheet. And now I'm looking for the next opportunity in the market. And then we zoom out and look at the next 100 trades. There's no point making money on 100 trades if you can't repeat your actions. If you close this trade here because you were afraid it was going to lose, or if you pulled your stop to break even and got tagged out at break even, you can't repeat that stuff. Have a simple rules-based system, go and back test it, write a trading plan, and then execute on that in a demo account or a very small live account until you prove to yourself that you are, one, objective, and two, you're making decisions that are process-based decisions, not emotional. Didn't mean to have a bit of a rant on it, but it was a small call on Friday, and I wanted just to share that with a slightly bigger audience because it's an actionable step that we can actually go and apply this stuff and hopefully see an improved return in our trading as well.
Nice, nice. Thank you for those gold nuggets, Rich. You always have those good insights on psychology, how discipline, execution, and that's why I would like to invite everyone who is interested. Do you like Rich, his insights? I mean, do you like his way of looking at the market? Is this serving you well? If it is, Rich has a YouTube channel called Take Action Trading. And there you will find more of Rich, right? Subscribe to his channel, show your appreciation, because Rich is a good trader, to use as an example of how we can improve. Rich is a very good trader. So I'm delighted to have Rich with us today, and every day he is able to join us. We do have a few questions. Let's see. Harash says, Rich, that is why Rich is rich. Yes, indeed. Let's see. Yeah, and people love your concept because it is clear. You do it in a very understandable way, and you have a way of bringing those concepts to life. That is what we all appreciate from you being here. There is a question before we wrap this show, this live stream. There is a question I want to discuss before we go. Going back to order blocks, this question Louise is asking, for day trading, what time frame is the best to look for order blocks? Well, day trading is still a broad term, so I'm not sure what time frame are you looking for normally in your day trading. But if you're trying to catch the move of the whole day, right? I would start. I will start on the H4. I would look to use the H4 and let the H4 guide you. If you're looking to catch the one of the biggest, more significant move of that day, you could be using lower time frame, but an H4 basis for your setup is a great place, and that's what I do with my trading. I base everything on the H4. Before we leave, we close this live stream. I would like to look at the Nikkei. Nikkei has erased a little bit of that losses we saw today. It's currently at a little less than 6%, which is still very, very, very high. but it's less than it was before. And if we look at Nasdaq, for example, which at some point was much lower, we are seeing some buying coming to the market. So that is for you on. If you look at S&P as well, you can see there has been some buying interest. It hasn't broken any structures yet. It's not a reversal pattern, but there is that little engulfing. See that? There's that little engulfing closing a higher above. That's the first sign of market. The buyers are coming in and picking this up. So let's see. It also applies for Bitcoin, right? After that news, the market is bouncing back from previous days low, or lows of losses from today, previous moments of today. So we are seeing some reversals in the market. So that's it for us. We do have an exciting week. Not only today, Rich is joining us, but tomorrow as well. So come back and benefit from all the years of experience that Rich has to offer. And we have another surprise. This week is packed with good contents, guys. Tomorrow we have Sol, the CEO of the 5ers, trading live with us. So do tune in. It's going to be a great session. Sol will be with us, and Wednesday we have another. I will not mention it. I will keep it as a surprise. So Wednesday we have another special guest coming on. So this week is all for you guys. As always, we're focused on your growth. Before we go, Rich, do you have any closing comments? Anything you want to add?
Any closing comments? Just, you never know when the market's going to hit you. With a day like today, it is so out of the ordinary. Always manage your risk before you get in a trade. Always define your trade idea and stick to that. It's the only thing that you can then have enough information to measure and improve on over time. Other than that, I'm out of ideas, mate. I'm going to go and eat more ice cream.
Thank you, perfect. All right, hit the like buttons, guys, if you like our content, you like everything we've been sharing. We do it for you. Show us your appreciation, show us this is helping you, and hit those like buttons, and help us continue to bring you good content. All right, with that said, I will see you guys all tomorrow again.
See you
Bye
tomorrow.
bye.
Cheers.